Welcome, Patrick, and for those who are used to come to our conference, you are a face that a lot of people know because you very often come and usually you talk about the economic overview, what David did today, but today you will talk about the short-term investment product available on the market and what are the specific features. So, Patrick, the floor is yours.
Thank you. Thank you very much, François, for inviting me. Good afternoon, everyone. So, how to manage your cash efficiently? In fact, we have several options when investing excess cash among different products. And we have here the possibilities you have on individually speaking. We have tried to rank the benefits of investing in those solutions from the best to the weakest. So if you speak of treasury bills, short-term treasury bills, of course, the diversification is low. The yield can be very low. Still, the security is high and liquidity is high. Certificate of deposits and bank deposits, diversification is low, or you have to organize it by yourself, and it's not much easy. And of course, the risk can be very, very different, and you have to address this risk by assessing from your own the credit risk, the credit of default, and the credit events, like we've seen with the Credit Suisse example. Three-party repo is a solution well balanced through the different very important criteria, which are liquidity, security, consistency of the performance, yield, of course. But the cost of implementation and the complexity of implementation is maybe a little bit higher than those other solutions. Money market funds use all these different options. When building a money market fund, you can invest in treasury bills, in certificate of deposits, in bank deposits, or in three-party repo. And what we try to achieve when building money market funds is a well balance of all those very important criteria: liquidity, security, capital preservation, of course, consistency of the performance. What we call consistency of the performance is the low volatility of the performance within a very short-term recommended investment horizon, and of course, an optimization of the yield. So what is needed when you invest your cash is to closely and identify your liquidity needs according to your time horizon. It's very, very important to segment your horizon when you consider your cash needs. And within a recommended investment horizon from 1 day to more than 6 months, you address different needs: daily cash, operating cash, or strategic cash. And what can be offered is solutions through a continuum of liquidity solutions within the recommended investment from 1 day to more than 6 months, with an aim of capital preservation at any time for short-term money market funds, aiming at managing daily cash on a daily basis. For a high level of capital preservation within a recommended investment horizon, which must remain very short, less than 3 months, for the operating cash through standard money market funds, for example, the second category of money market fund as designed by the EU regulation, or for people having a longer visibility on their cash. We have the possibility to propose ultra short-term bond funds with a capital preservation goal in line with the recommended investment horizon. More than 6 months, people have to be ready to cope with a more volatile approach and, of course, with a better possibility to outperform money market funds.
Qualified as
No,
cash?
no,
Not
no,
cash and
not
cash, right.
qualifying, not qualify the cash and cash equivalent, of course, because the volatility is too high, but these solutions are still dedicated to liquidity solutions. They must be liquid on a daily basis, but with a profile of volatility which is much higher. So what is a money market fund? It is a type of mutual fund that primarily invests in a low risk, high grade and short-term instruments. They are strictly regulated by the EU money market fund regulation that has been voted by the EU Parliament in 2017, which is effective since 2019, of course. They invest in certificate of deposits, in term deposits, in short-term bonds, also in other instruments like three-party repo or reverse repo. They provide you performance in line with overnight benchmark, Euro STR, for example, or effective Fed funds. And they are different categories of solutions, short-term money market funds, standard money market funds, and different format of money market funds. CNAV money market funds fully invested in govies. LVNAV money market funds with a rounding to two decimals and amortized cost valuation approach, and VNAV money market funds within two categories, the short-term category and the standard money market categories. So you have here the different investment solutions that are so you have here the different products in which money market funds invest. So I will not elaborate further. I've already mentioned the different possibilities we have, from maturities ranging from 1 day to a maximum of 2 years for standard money market funds. And all these money market solutions are cash and cash equivalent because they invest in high-grade products, high liquid products, and with a low profile of volatility, which is quite important for the qualification of cash equivalent with an insignificant change in value of the NAV. So for the investors, the benefits are liquidity, simplicity, and flexibility, of course. You have the possibility to get back your cash on a very short-term notice, on a D+0 settlement basis. You can invest small amounts, different type of amounts, and there is a notion which is very important for the regulator, it is the fair treatment of all the investors invested in a money market fund. Consistency of the performance is very important because money market funds must manage big in and outflows on a daily basis. So their performance must be close to the evolution of the benchmark, and customers are keen of finding a solution with a low volatility of the performance to be sure that they can get a return close to the benchmark of the day. Last but not least, diversification is key, of course. We have funds with more than 60 different issuers. High diversification in terms of maturities, in terms of sectors, in terms of ratings. of course. And diversification is also performed on both sides in terms of assets, of course, but also in terms of liabilities. The community of shareholders comes from different sectors, different countries, and of course, we have a high granularity of the liability of the fund, which participates to the stability of the AUM and the liquidity, overall liquidity of the products. Customers invested in the fund have different cash patterns, and it participates to the whole liquidity of the product. Of course, the product is secured by the credit risk assessment which is performed by the asset manager, and we have teams of credit risk analysts who are permanently assessing any risk of default or credit event prior to the investment in the fund, which is a competitive edge when you consider investing your surplus cash in other solutions where, of course, you don't have this capacity offered by an asset manager to assess the credit risk of money market fund, which is the main risk, but which is addressed also by the diversification. So if you allow me, we can continue with the regulation, maybe?
Yeah, talk a bit of, we will cover it later on, but just give us a flavor of the regulation, because it's highly regulated sector.
Yes, definitely. We benefit in Europe from a very, very strong risk framework, regulatory risk framework. It is not only in Europe. This is addressed by the FSB on worldwide, and in the different countries where money market funds have a big importance. Regulation is eager to address any risk of default or any risk of run from those products. Definitely. So if we speak of the European situation, are we done with regulation? Not yet at the moment, because we have seen different events with the March 20 run for cash out of money market funds due to the COVID crisis. We have seen the Archegos default, which triggered the difficulties of Credit Suisse. And we have seen also the mini-budget crisis in the UK, which triggered a lot of jitters on the fixed income market, GBP fixed income market, and difficulties for a number of money market funds with liability which was too much concentrated on only few investors. So this is why there are a series of regulators willing to continue to regulate further money market funds, and all are aiming at asking a higher level of daily liquid assets and weekly liquid assets for money market funds. And we have even seen the FCA recently, through a consultation, asking money market fund to have 50% of weekly liquid assets in their portfolio, which is in the wake of the SEC recent evolution of regulation, which imposed hike of daily liquid assets to 25% and weekly liquid assets to 50% for prime money market fund in the US, which explains why a series of regulators in Europe are also keen on challenging asset manager on their bucket of instant liquidities. We have also seen that for LVNAV funds, which can have a gating approach in case of breach of their weekly liquid asset buffer, regulators are ready to consider to delink the necessity to put in place gates when there is a breach of 10% of weekly liquid assets, to breach this automaticity of imposing gates when there is a breach of 10% of weekly liquid assets, with the will to let asset manager to use their weekly liquid assets in strange market conditions. Recently, we have also seen 4 national competent authorities, the AMF in France, the CONSOB in Italy, the CNMV in Spain, and the Austrian regulator, stating that they would like to ban the amortized cost accounting that is implemented by LVNAV money market funds in the future. So there are still discussion going on to see how to further address any risk of run on money market funds in strange conditions, conditions where liquidity on the secondary markets is affected by a crisis. So the next step is that definitely the European Commission is expected to review the money market fund regulation after the election. It will not probably be a huge reshuffling of the regulation, but adaptation, like the considering to delink gating from the weighted liquidity assets. And we have also, in the wake of the recent reviews of AIFM and UCITS directives, level 2 and 3 measures expected to be drafted by ESMA to implement liquidity management tools, not only in money market funds, in all funds. 2 liquidity management tools will have to be implemented. For money market funds, only 1 will have to be implemented. So this is why there are regulatory, technical standards that will be drafted to, and also definition of those LMTs, calibration of those LMTs to be put in place throughout 2025 and 2026. So we are not done with regulation concerning money market funds in Europe yet.
Good. You okay? Yeah, conclusion.
So define precisely your investment horizon, your cash needs, yes. Be very, very cautious in terms of credit risk assessment, and this is the added value of an asset manager who has the possibility to do thoroughly study of any risk of default or credit event. Use the right product at the right time, and of course, capital preservation is key, liquidity is key, and don't sacrifice risk to performance or liquidity to performance. Be quite cautious and choose the right positioning.
Okay, very interesting. So if we want to wrap up, we can keep in mind that when we look at your Venn chart, that money market funds are quite well balanced and
this is the goal of
magic pentagon
management. Yes.
Yeah,
Yes.
similar to the tripartite of the guaranteed deposit, and so a good point. So it's also possible to use for both products, and we'll talk about guaranteed deposit later on. But it's possible to use platforms. So there's also something that make life easier than calling the bank or asking for a term deposit. You mentioned the risk rating or not rating. Also, rating remain an opinion. The regulation is highly regulated. I totally agree with you. So we escape the review and the reform of money market fund in Europe, but we know that with the new commission, and especially what is happening with the consultation paper in UK that could come sooner or later, we have not mentioned ESG, but I guess in your family of product you also offer ESG products. So Article 8, I guess.
Yes,
yeah,
yes.
okay.
All our funds are Article 8.
And in terms of performances, it's quite interesting to see, if I understand you well, that the performances are close to Nester, let's say, benchmark.
Yes, close to the Euro
short-term
STR.
deposits.
Yes, yes.
But with more flexibility, let's say, because you have the, depending on the product, liquidity. And I totally agree with you. So it's great to increase, let's say, the protection of investors, but it could be detrimental for the investor because it will be at the expense of the return on money market fund, and potentially we are just as corporate afraid of having a concentration of player where the EU would like to increase competition. So
yes, indeed, money market funds are funding the real economy. They are part of the short-term funding market. They account in Europe for 1.7 trillion euro of asset under management. And contrary to the US money market funds, of onshore US money market funds, they mainly invest in private debt, in private non-government debt, corporate debts, of course, which mean that should we have too strict level of weekly liquidity to abide, it would be detrimental to the funding of the real economy.
No, I totally agree with you. So it will be, let's say, counterproductive. And we should not forget that money market fund is not an investment product. It's also a product for, let's say, finding some investor to invest in your paper issue, the commercial paper or short-term paper. And so for the economy these days, it's quite important. And we also know that the Capital Market Union is one of the missed objective of the Van der Leyen Commission. I don't know if Van der Leyen will be our new chair of the new commission, but guess that it will be one of the priority according to the Eurogroup. So
yes.
Thanks a lot for all this comment and very insightful information about the money market fund and the reform. Thanks a lot.
Thank you very much. Thank you.